Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello and welcome back to the channel. Today, we'll take a look at what is happening locally and go through a few scenarios. First, we have this 5-day setup that has triggered a trade. It's a simple setup I've shown before. Whenever the 5-day candle closes above the 5 EMA, it triggers a long signal. We can see that this strategy does not have a high win rate, and I do not trade it directly. I use it only as a directional bias tool. It has a win rate of only 39%. But the equity curve still trends upward over time because of the profit factor. The reason is simple. When it catches a real move, it usually catches a big one. The average winning trade is around 25%, which would bring Bitcoin to roughly 90K from here. The average losing trade, which happens more often, is around 5%. Another important observation is that when this setup fails, it usually fails within the first 2 5-day candles. So if the setup is going to fail, we would expect that to happen sooner rather than later, typically in candle 1 or 2. If it fails, then we either look for lower prices or simply wait for another EMA cross to trigger the setup again. What we can also see is that no major move really happens without this setup triggering first. So more or less, this setup needs to hold if we want to see higher prices. If it does not hold, then we could simply continue ranging. We can also observe that this EMA gets retested very often. In many cases, price revisits the 5 EMA after the trigger, not always during highly impulsive moves, but in most normal conditions we do see retests. Right now, price is retesting that exact EMA. Wicks below are fine, of course, but over the next 3 days, we will basically see whether price can close above or below it. If it closes below, the setup is invalidated and we wait. If it closes above, we continue observing cost. On winning trades, price moves higher for around 9 candles on average. So if the first 2 candles stay above the EMA, the probability of the setup playing out increases. That's the setup. Very simple. Again, I do not trade this with leverage. I only use it for directional bias because you can clearly see how useful it is once price starts moving. It often stays above the 5 EMA until the move ends, which helps us hold trades longer and ride moves higher. So that's what we'll be tracking over the next few candles. This setup tells us when a move is possible. Of course, just because it triggers doesn't mean price will move up. As we can see, it only works around 39% of the time. So yes, many setups trigger and then fail. But if it fails, then we know it simply was not the time for the breakout. If it triggers and holds, then we know the timing for a breakout is there, unless it gets invalidated. No major move happens without this setup. That's why it's interesting to me. And right now, it has triggered, which means we have the potential for a breakout. Yes, it's only a 39% probability based on this setup, so not huge, but still better than guessing. What I mean by that is, a lot of people simply say, it will break up or it will fail, without any real explanation, confluence, or logic behind it. Here, you have one clear reason. Yes, it's a low probability setup, but since we don't trade it directly, no money is lost if it fails. For me, it simply means that when it triggers, there is at least a measurable probability for price to begin a larger move higher, because historically, all big moves start with this setup. Now let's switch to the next chart. That's our weekly chart, where we have the higher timeframe support resistance level, which Bitcoin is currently trading inside. Basically a range. We had another attempt at a breakout, but so far we've seen another local rejection. So there's not much to say here. For a real breakout, we need either a close below this range or above it. Until that happens, we simply trade the range. We need to see what this week brings, because the monthly average time window is coming to an end, and price still has the potential to make its move, but I'll show that in the next few charts. First, let's switch to the yearly Fibonacci time and price chart. What we're looking at here is simply yearly Fibonacci timing combined with price levels based on time and price. By the way, if you want to know how to draw this, you can check out my video on how to build the time price chart. What we do here is watch for when price meets time. When that happens, we look for reactions or reversals. The last price time cross was down here at the lows around 65K. That's where I longed, and I held that long up into this high where we took some more profits while still holding the rest. The next Fibonacci time window comes around the start of May. That means we'll be watching where price is when we enter that time window, because that's where we would expect some movement. That move can happen if price reaches the window from above, from below, or if this range simply continues longer and the next bigger move starts around that time area. So what I'm watching right now is whether price can reclaim this resistance area or whether it rejects here, and we see another leg down into the next support zone. From there, we continue step by step. If support holds, we look for a bounce. If support fails, we look lower to the next level. I also marked the next FOMC date and the pre-FOMC dates that we monitor for a potential pre-FOMC reaction. That will basically be by the end of this week. Not only do we have the pre-FOMC timing there, but we also have the monthly statistics pointing to the same time area. I'll show what I mean on the next chart. In simple terms, we watch whether price rises or drops into those dates and ideally reaches an important SR level at the same time. That would then give us the confluence for a possible trade. The FOMC date itself is close to the yearly Fibonacci time window, so that will be the more interesting area for me because of that additional confluence. And again, this chart is not predicting direction. It simply provides timing confluence for our setups. So with that said, we need to wait a bit longer and then see where price is once we reach that time area. And with that, let's take a look at the current range and the monthly stats timing. And this is our range. We can see that price is trading mostly in the upper area of this range. We had some deviation below the mid-range and deviation above the range high and value area. The last bigger long we took was from the mid-range. At that time, we had a statistically higher chance for a bounce, and I traded that confluence. We had yearly Fibonacci timing hitting price levels, and in this case, it aligned with the range mid and the value area low. At that time, I said this was the setup for me, and that most likely many people would stay sidelined and not long it. So a lot of retail traders were likely left behind on this move up and probably shorted every small bounce. At the same time, the lows of each move were heavily shorted, which simply pushed price even higher. Now price has reached the upper part of the range again. It has also hit the anchored VWAP, where we previously saw a rejection, and it touched the trend line from the all-time high. So yes, technically it has reached resistance and could simply reject here and move back down toward the next levels. But what I'm watching now is the monthly average timing for highs and lows. We can see that the average timing for the monthly low is basically ending today. That means historically, around now is when price tends to form the monthly low. Since price is currently at the range high, that would imply one of two things. Either price dumps hard enough today to make a new monthly low, or the monthly low is already in and we do not make a new one this month. The current monthly low sits at the mid-range. So if we do see downside from here, I could look for a higher low, at least for this month. To be clear, these are averages. Price can still move below after this timing window. But if that happens, I would then expect a more meaningful move lower. So the timing is useful in both directions. Still, I always go with the averages first, and only if they fail do I move to the next scenario. So for now, the average monthly low is basically in. If we do not see a move below the mid-range today or tomorrow, then that scenario likely holds. Now for the monthly highs, we can see that price came very close to the average wick high for bearish months. So in bearish months, this would be the average high of the monthly candle. I count that as basically tapped, and I think it did its job very well again. By the way, none of the average low levels were touched, so keep that in mind. If we do move below the mid-range, then those downside scenarios become relevant again. But not for now. What else we have is the timing for the monthly high. And here we can see that we still have roughly one more week in the average time window for the monthly high to form. That means based purely on averages, the top is not confirmed yet. So what I'm watching this week is whether price can hold this area here. If it holds, we could still see a new local high or even a fresh high within this monthly time window. If it fails and trades back inside the range, then we return to an environment where, based on averages, I no longer expect a new high or low to be made, and I would reassess from there based on where price sits here. Another thing to note, the average monthly high timing aligns with the pre-FOMC date next Monday. So the ideal scenario would be a rise and new high into that date, where we could then potentially look for another trade. If price moves down into that date instead, I would also look for a potential trade. But that would not have the same monthly timing confluence, because the monthly stats are pointing more toward a high forming, not a low. So with that said, this week, price needs to hold this area if we want higher prices. Otherwise, the timing confluence fades and we likely just continue ranging. A break below this area and a close beneath it would also invalidate the 5-day setup I showed earlier, which would confirm the idea that we do not get a breakout for now. In that case, best scenario would be a move back toward our previous lower levels, where we would most likely look for new trades. So that's how things currently stand. Eyes on the local levels here. If this fails, we move back to the next lower support area, where I will create a new plan. All right, now let's have a look at momentum before I wrap it up. First, on the 2-week time frame, we see a cross up for the first time since the all-time high, and it will remain bullish as long as it closes above 65K. That is our mid-range, as you remember. So as long as the 2-week candle closes above the mid-range, momentum is slowly shifting, although it is not a full signal yet. On the weekly time frame, we can see momentum slowly moving up and remaining bullish as long as BTC closes above 69K, which is basically around the range high area. If we see the weekly close above that, momentum remains up. If not, then we go back into range mode. By the way, the MACD is also crossing up. It has now crossed with this close, which is the first bullish cross since the all-time highs. So that points locally toward a bottom formation if price is able to hold this range. There are clearly several signals suggesting a move may be building. But as always, it all comes down to price and whether it is actually ready to move now. As you've seen, the 5-day setup triggered. Monthly stats suggest we could still have another week of rising prices statistically. Several momentum signals support that move now. But for all of that to matter, price still has to move. If it doesn't, then all of this may simply take longer. On the 5-day time frame, momentum remains up as long as BTC stays above roughly 65.7K, so again around the mid-range. The 3-day time frame remains more or less in decision mode, hovering around the middle area. It needs a close below 69K to cross down. Until then, it remains crossed up. We'll check that again in 2 days. Not very helpful for now. On the 2-day time frame, momentum remains up as long as BTC closes above 66.7K. Now on the daily time frame, price is hitting the upper area, and we currently have some bearish divergence unless price makes a new high. Right now, price is making a lower high, while momentum is making a higher high, so we have divergence there. If price loses this upper area, then yes, that momentum setup could lead to downward pressure and a move back into our previous levels, where I would look for reactions and new trades. For now, however, this is not bearish by itself. It is simply at the top of the range, and price action still needs to confirm any reversal. Momentum is only lagging confluence. Until price confirms, we simply observe. On the 12-hour time frame, momentum has crossed down and remains bearish if this candle closes below 73K. So ideally, we want this area to hold. If it fails, then momentum likely accelerates lower. On the 6-hour time frame, momentum is almost at the lows and remains bearish as long as price closes below 72K. What that means is, if price breaks down here, then the higher time frame momentum could start playing out into lower prices. The midterm timeframes would reset, and then if price rejects after that reset, we could see the daily momentum reset lower as well. But if price is able to hold here, then this lower timeframe momentum can simply act as confluence for another leg up. Again, price action must confirm that. Momentum is lagging. Price could already be moving higher before momentum crosses back up. So as always, first we watch price action and whether levels hold or fail. Then momentum becomes confluence. Next, the 4-hour time frame. Momentum is at the lows and remains bearish as long as BTC closes below 71K. Personally, I would want to see price move above the range high and ideally above the trend line from the all-time high before turning more bullish again. But yes, if price holds here, we could see a bounce. If this area fails, then like on the 6-hour time frame, the probability increases that any bounce afterward is just a retest before another leg lower. I also see my VIX indicator showing signals here, which is nice and often acts as bottom confluence. But I can also show you examples where price still moved lower afterward. So as always, never use indicators or tools on their own as signals. Just because something flashes does not mean a reversal is guaranteed. It is only confluence. Price still needs to hold or lose key areas for that signal to become useful. For example, in the last range, we saw price continue lower despite the signal. In this current range, the same signal was excellent confluence for the bottom. Even then, sometimes it marks the exact bottom, and sometimes price chops around longer first. Basically, this signal works best when it flashes at strong levels, not randomly in the middle of nowhere. If it flashes at important levels, then yes, it becomes very useful confluence. What is different right now compared to previous situations is that it is flashing while price is retesting the higher SR level. Price has not lost it yet, but it also has not bounced properly so far. So let's see what we get here. And finally, the 1-hour time frame. Momentum is in the middle area and remains bearish as long as BTC closes below 71K. For me, I would still need to see price break higher, ideally make a new high, because right now this is simply a tricky area. It is resistance, but at the same time, price has not fully lost current support. So I will observe what we get here and then decide whether I close my local trade or not. We now have Monday open, so I'll give it a few days. Tomorrow, we will mark out the Monday range and go from there. For now, I have some trades open and will manage them based on today's moves. And that's basically it for the bigger view for now. I'll look at the local levels in Patreon next, but the bigger picture should be clear from here. We have a potential setup for a breakout. Sadly, it has a relatively high failure rate, but all bigger moves only happen with this setup, so we need to watch it. If it fails, it usually fails within the first weeks, so if it's going to fail, now is the time for that to happen. If it stays active and holds this area, then the probability of a move higher increases. Locally, it all comes down to this support resistance area. If price moves below it, then downside pressure increases. The 12-hour and daily momentum could then start pushing lower. Lower timeframes have reset for now, but they also need this area to hold. Otherwise, we look lower level by level. I'm still in my other trade, so if there's a bigger update, I'll post it. Until then, I wish you a nice day, and I'll see you in the next one.